welcome to the sixth edition of ETBFSI Converge 2025. Today I'm joined by Mr. Dinesh Khara, former SBI chairman. Welcome to the event, sir.
Thank you. Thank you very much.
So, my first question to you would be on financing India's momentum. GDP at 8.2, inflation at its lowest, rupee at its lowest against at 90 against USD, RBI cutting rate. Where do you see the economy growing? Do you think there's consumption happening at the ground level? What's your overall view of the Indian economy?
No, I would say that considering the fact that the GDP has grown at about 8% plus, is actually a very, very significant achievement for the Indian economy, and that too it has to be seen in the context of the global economy where it is. So I would say that it is all fueled in terms of the consumption and more so the kind of steps which have been taken by GOI in the recent past in terms of rationalizing the GST and also rationalizing the income tax also, which has left cash in the hands of the people. So I think that is something which is very encouraging. And I would say that the way the steps and the policy decisions are being taken to ensure that the consumption must not slow down. So I think these are very encouraging, and this is also essentially addressing the kind of challenges which we face on the from the global headwinds also. So I think overall, as far as the policy making is concerned, and also the steps which are being taken by the government of India and the regulators are all in sync to ensure that we should not slow down as far as the economy is concerned.
Sure, sir. Thank you. I'll move on to my next question. You've been at the helm of the largest bank of the country, and just last week we saw RBI cutting rates by 25 basis points once again. Banks were not expecting until the rupee depreciation and the macroeconomics played out. How do you think banks should be managing the margin squeeze? And what's your outlook? What's going to happen on that front? How important is it to kind of manage? Because while we speak, they show optimism in terms of while the margins are under pressure, all the other metrics are fine. So first, how should they be managing the margin squeeze, and how big of a hurdle is it going to be as the fiscal year 26?
Actually, when it comes to margins, we are ignoring the fact that the preemptions which were there in the past, they have been eased out. The cash reserve ratio which has been reduced. So to that extent, it will give the possibility for the banks to actually retain their margins. And on the top of it, the kind of credit growth which is happening now, which it has actually gone up, and it will be somewhere in the range of 12 to 14%, as it has been indicated by various banks. So with that kind of a credit growth happening, perhaps their ability to retain the margins or maybe maintain those margins would be possible. And if at all you really look at it, out of the 100 basis point cut which had already happened, banks had actually passed on to the extent of about 69 basis point as well as the new loans which were being underwritten. But at the same time, the old loans are also there. So I would say that overall, while balancing various factors, banks should be in a position to maintain the margins, if at all they cannot increase them.
Sure, sir. If I may add one more question, there's huge debate about whether AI is going to replace humans. Quite a lot of foreign banks have announced layoffs. From the perspective of Indian banking and the way we operate, what's your take on artificial intelligence in banking and that kind of leading to layoffs?
Well, when such question comes, I'm reminded of the digitization era, because I had put in 40 years with State Bank of India. I've seen the manual banking to the digital banking. So we have seen such questions coming up at each of such kind of a cusp. So I would say that when it comes to artificial intelligence, it will probably take away the drudgery which was there in each of the roles. And when it comes to the application of mind or the judgment, that will still stay on. So I think perhaps the human mind will be having a much better variety of things to do, and the routine activities can perhaps be handled by the AI, and maybe it will lead us to the next growth phase. Particularly when we look at the capital output ratio, it has actually, the capital output ratio is quite adverse now. And if at all we have to achieve the kind of growth of 8% and with the savings rate being at about 30%, unless and until we have the capital output ratio which is favorable, to my mind, AI will be a tool, will be a lever which will help in terms of having that capital output ratio in our favor. So I think for a capital deficient economy like ours, application of AI will go a long way in terms of ensuring that we become a developed nation by 2047.
Interesting insight, sir. Thank you so much for your time. Stay tuned with ETBFSI for all the updates coming your way.